Hey everyone, it's Ben Hardy here, and in today's video we've got some big updates for the car market with everything that is currently happening in the economy. Before we get into this video though, as always, if you want to save time and money the next time you purchase a car, link to my car buying guide in the description down below. And then if you want to see more videos just like this, then I recommend you subscribe because I post content every single day. Let's get into it. So we're going to start things off by talking about inflation, and more specifically inflation within the automotive world. So with used cars, we are still actually in the red when it comes to inflation. Used cars are cheaper today than they were a year ago, although, if you've been following the channel, you know that those used car price decreases have been, turning into increases over the last few months. And so over the long term, yes, prices have gone down, but in the short term, prices are going back up with used cars. Now with new cars year over year, they've definitely gone up in price by a pretty large margin depending on the segment. And this is interesting because if we look at overall inflation, the inflation read CPI year over year is about 6% currently. And if you look at new cars, apparently it's just a small amount of increase year over year, which I don't agree with that look in the report because, again, if you look at certain new cars, they've literally increased in price by 20, 30, 40% plus. And so when the report says that it's marginal, it's okay, that seems kind of fishy to me. But anyways, regardless, what this shows is that everything is supposed to be more expensive today, and the only thing that we are currently seeing in the automotive world that is technically less expensive is used cars, although they are more expensive than they have been in a long time historically. Now, the topic of inflation is a great segue into the next topic, which is going to be recession. Now, I am by no means an economic expert, and so I did a bunch of research for this video to see what all of the quote-unquote experts are saying. And what they're saying is that recession risk seems to be increasing as time goes on. Now, there's still a camp of people that say that we are currently in a recession, and I'll let you guys dispute that in the comment section down below. I'm not going to take one side or the other because, again, not my forte. But basically in the next, 18 months, roughly speaking, a lot of these experts say that, we're probably going to go through some sort of recession. And so this is obviously, changing the posturing from the Federal Reserve and just the government in general, right? Because it was super bullish on rate hikes and all that kind of stuff. And now it seems like it's pulled back, especially considering the bank stuff that we've currently talked about on the channel, where you had, the whole Silicon Valley Bank situation, and a lot of people lost trust in banks. And so it seems like there's quite a bit of pullback. And so there is potential that not only will we not see more rate hikes, we could actually see some pulling back on rates where the rates actually start to decrease. But again, I think it's a little bit too soon to tell on that part of things. And now this leads us back into something that's a little bit more car centric with the topic, and that is going to be retail sales. Retail sales are still declining from a month to month basis. So the only thing that is currently propping up the new car market in terms of volume, which will push the new car market to probably sell more volume this year compared to last year, is fleet sales. Retail sales are just super soft, and they're continuing to soften. And this is why we're seeing more and more automakers releasing incentives for retail pieces, because they're just frankly not selling. And if this market softens enough, then we might start to finally see some big discounts. And I'll kind of talk about that a little bit more later in this video. But the point in this section in the video is that the retail side of things within the automotive industry is continuing to basically degrade, which means that something's going to have to change if that market wants to, increase in volume or frankly hold the current amount of volume, because right now the volume is decreasing on the new car side of things. And then with used cars, volume is actually also decreasing. Yes, used car wholesale prices are increasing, so you think that that would push volume to go up because you're like, oh, if prices are going up, that must mean more people are purchasing. And that's not what's happening. In reality, car prices are going up, and then more people are just pulling out of the car market altogether. So now let's dive into the Ben Hardy opinion section of today's video. So with everything that is currently happening in the economy and the posturing from the Federal Reserve, what I see happening is just a pause with the rate hikes. I don't think that the Federal Reserve is going to pull back and lower rates anytime soon, because again, inflation is still way higher than what the Federal Reserve has targeted. It sounds like they want inflation to be around 2 to 3%. We're still at 6%, so double to triple of what the Federal Reserve wants. And so I don't think that they're going to lower rates. But with the whole bank run situation we had on the small scale, right? And just a lot of fear around that big establishment, I think that they're just going to pause for the next few months and just let the economy do what it's going to do. And then they're probably going to jump back in. And when they jump back in, my guess is there's probably going to be more rate hikes. Again, I'm not an expert in this field whatsoever, but the reason why I think that there are going to be more rate hikes is, yes, rates are definitely higher than they have been over the course of the last decade. But the thing is, people get used to whatever the situation is. And if there's a pause, then people will just be like, okay, well, this is the new normal, and so this is what rates are. And so then people kind of go back to buying as normal. Now, yes, you'll have individuals that are in the lower income brackets that are getting hammered with inflation, and they're also getting hammered with these higher interest rates where, when they go and buy groceries, for example, they're way more expensive, and that is a much larger impact on their income compared to someone that's making a lot more. And then if they have to borrow money, right, they're having to borrow it at a much higher interest rate, and so they just won't have as much money. So these impacts will definitely be more impactful for lower income brackets, but for the higher income brackets, not as much. And so those higher income brackets, could potentially cause the inflation issue to continue because they'll just keep on buying. And this is where I kind of want to dive back into the car market with what I see personally happening. So used car wholesale values are continuing to increase, which is basically causing demand to continue to diminish because used cars are becoming unaffordable yet again. I know there's a lot of people that are going to say, well, they're already unaffordable, but if you look at the price of new cars right now, a lot of used cars look like a pretty dang good deal compared to their new counterpart. I'll use the Jeep Grand Cherokee as an example. A brand new Grand Cherokee is like a $50,000, $60,000, $70,000 vehicle, whereas you can get a used 2018, 2019, 2020 Grand Cherokee for around $30,000, maybe $35,000 for a very nice pre-owned vehicle, even certified pre-owned. And so in that case, right, even though some people might go, wait, that used Grand Cherokee is about the same price as what it was brand new, it's still a lot less expensive than an actual current brand new Grand Cherokee. And that's just one vehicle. There's a lot of other vehicles that follow that trend as well. And so the point that I'm trying to make here is I do see some demand diminishing from the used car market as these wholesale values increase, but there's eventually going to be a ceiling, right? They're going to hit the ceiling because people are going to pull back enough. And once it hits the ceiling, I honestly don't know what's going to happen at that point. The only thing that I feel like would actually put lots of downward pressure on the used car market where it would push prices to, I don't think ever go down to what they were prior to the pandemic, but go down to a more reasonable level, maybe 10, 20% higher than what they were prior to the pandemic, is if new cars get heavily incentivized. And this is what everyone's thinking is going to happen this year, but it's too soon to tell, frankly, and it just depends on how much fleet demand there ends up being this year. If there's enough fleet demand, that will obviously prop up prices. And again, you also have the demand from the higher income individuals. And it's really strange to see what's happening within the market because the shift that I've seen over the course of the last few months that I think is a trend that's going to continue is you have cars that are like $90,000 plus that are still selling really well, $30,000 and under still selling really well, everything in between not really selling whatsoever. And so it's kind of putting the car market in this weird situation where I think that the headline figures are showing different things than reality because reality happens to be so weird. So in summary, used car prices are most likely going to continue to go up at least over the course of the short term, but they're eventually going to hit a ceiling, and they will hit that ceiling sooner if we start to see incentives on new vehicles, which we will most likely not see on vehicles under $30,000 or over $90,000, but that chunk of vehicles that's between $30,000 and $90,000 that nobody's really touching right now, we'll probably start to see more and more incentives, and so then the used versions of those vehicles will then probably see the price declines. Well, surely we'll see the price declines, but the used versions of the really expensive vehicles and the really affordable vehicles will not really see price declines. So then the overall used car market will decline, but it won't decline as much. Again, I know a lot of people are going to get confused, but It's a confusing market. And so with that being said, I want you guys to let me know what you think is going to happen with all of the market conditions. Do you think that the market's just all of a sudden going to crash because the economy is going to crash? We're going to go into, a lot of people have been saying depression lately, right? Are we going to go into depression? We're going to go into a recession. What do you think is going to happen? This is going to be the tinfoil hat video. That's what we'll call it. So put your tinfoil hat ideas in the comment section down below. I'll see ya.